Welcome to Trading Lounge and the commodities, and starting with Bitcoin here. We're on the daily chart and we're viewing this move up through here. Now, first of all, we can also place wave 1 over here. That's also justifiable as well. So if you've got that, that's fine. Over here is also fine as well. This particular move up here going into the first wave up here, we're not at wave 1 yet, so we'll be looking for 5 waves between this particular low and this particular move here. I also want to point out too that this is the bullish move for this market. The bearish move would be having this low as an A wave here, and then at 50,000 roughly, at the little pocket there, 62 to 65%, that would be wave B, and then a wave C over here for this. That's possible. Obviously the fundamentals for Bitcoin is positive, so I'll go primary with this particular move here. I'm labeling this as wave 2 and not wave 4 because it's pulled back 78.6%, so too deep for a wave 4. So as I mentioned before, even though Bitcoin started in the 208, 209 sort of area, and it's had major crashes along the way, but all those crashes are basically wave 2 of various degrees. So it's still like a penny stock in the building process. So we'll just cut into this particular move through here, and obviously the move up here, the 40, is obviously the big number, and we can see consolidation over here as supply as well. And there are other numbers before that, so we're going to just go into the tick chart here, 5k tick. So in this case, I've got this counted a little bit differently, but it doesn't really matter, it's all the same. Basically, we'll see maybe one more little move here. I'll just check with Kitty upon chart in a moment as well. Haven't seen that for a while. And then some sort of ABC here, and then a top here. Now, this could also be wave 1 up here as well. It won't make much difference. We're going to see at the 40,000, we'll see a move like this here. So if this is 40,000, the arrival, the reaction, the first high above the level, and so on at that point. So yeah, we just need to be over this side with that. So that's sort of where we are really with this. Not a big deal. I will just have a look at what Kitty upon is doing here on the crypto side of things. Where's just check here. I haven't checked for a little while. It won't be too far off anyway. So Monday's chart. So yeah, so we've pulled back into we've topped out in wave 3, and we're pulling back in wave 4 on that note, and then pushing up for wave 5. I'll just see what he's got on the daily chart. Yeah, so he's got the same. Yeah, it's all. I mean, there's no other counts really. It's all pretty much the same. And I was going to have a look at Ethereum as well. So that should be in here. That would be pretty close here too. Right. So he's looking at this as wave 1. So on this one here, yeah, 1 and 2, same sort of thing here as well. So we'll be looking for a 1 and 2 pullback over here. So I'll have a quick look at that as well here. So this is Ethereum. I'm not sure if we got one more little push up here, and then we've got this here, but I certainly don't have this ABC pattern just yet for this. So this is what we'll be looking for to look on the long side over here for that. Okay, over to the treasuries and the yields. So we've seen this push up. As I've said before, there's different ways of counting this top. So if I got a classic trading levels pattern on top of 90, then we would look to be like this. If this was 90 here, we got the first high above the level. That doesn't mean that it's bullish, because it can just find resistance here and move down. But if it develops support here, then we'll need to look at this as being supportive over there, and then we'll need to bring wave 5 in. Now this will be the same for the 10-year treasuries as well. So the treasuries are the yields are pulling down. So basically with the treasuries, we've got this situation here, and I'm thinking like this here. So with the treasuries, the yields, 10-year yields here, we've got wave 4 here, and we're looking for wave 5 to the upside here, and this little move here will be this pullback that we're seeing at the moment will be wave 4, and then we need to move up for wave 5. So if we don't get support here, then we'll have one more leg to the downside, and in the same case over here as well, we'll have one more leg to the upside. Now, that would bring the dollar into this mix as well, so it's quite possible that we've got this top in place over here for the yields, and this low in place over here for the treasury bonds, but we'll just see if we get support here. At the moment, we can still treat this as wave 4 here, and the pull down on the yields as a wave 4 as well. So this will also bring in the dollar. So when we look at the dollar here, this is the DXY, the DXY here. There's two ways to look at this. So we can look at this as wave 5 low here with an A wave, a B wave, and a C wave up to this top here, and that's the end of it. And this move down here would be either wave 3 or C. The other way to view this this particular pattern is to consider this here as a bit of a triangle sort of pattern in here, and bring this, well, I'll just copy this and bring this in over here. Now, if that's the case, and this is a low, that's 5 waves up, we have to put that as 5 waves there now, so that's 5 waves here. Then we'll look for a corrective move back, and then another move to the upside here, and then down at that point. So there is a case of having this top in play here already, and that would be, I mean, if this top is in place here, that means the yields have got a top in, and the bonds have got a bottom in, and this dollar's got a top in, and gold would have a low in place at this point, right? So there's a good case for this being here based on gold at the moment. Okay, so this move inside here, coming down here, we need to investigate that, and I've actually used Malik's count, so let's just have a look at Malik's count on the US dollar here. So Malik has had this situation here. So look, he's got wave 1 here, so the A wave up here, and he's got this as a WXY, which is correct, and coming down here, and of course this has already fallen out of bed and moved down here, so that's already moved down. So we're looking at this area down here as the support, and because this is in 3 waves, this is in 3 waves, we can also look at the Y wave being in 3 waves there. So if we just go into our intraday market here on this here, we'll just go back over that and have a closer look at this situation. So this would be, we've either got wave C of 2 in here playing out, or we need to come over here for this. And there's a good case for Malik being correct here, because, and this would also put, you know, the change in the bonds as well being the wave 4 rather than tops in play. So this is quite critical at this point. So there's a good case that Malik is correct as the A wave here, the B wave here, and the C wave over here, because of this particular configuration in here. So it's okay to look at this as wave 1 here, but it's very difficult to look at this as wave 2. It's very complicated. It's not to say that it can't happen, but it's a bit unlikely that it is the case. It looks more complicated because wave 2 is normally quite simple, but maybe it was just by, you know, sometimes markets need to consolidate and drift sideways to wait for other things to fall into play. So we'll see. But this 103 here brings us into that that area there. We'll be looking for 5 waves from wave B down to wave C. So a little bit early to tell just yet, but we'll know shortly if we need to consider this as a top in play, or we'll be heading over here. And of course, this affects the gold market as well in in this light. So with gold here, we've been looking at this here as just on 1,000 ticks. As the first move up here is wave A here, and let me just get this into play. I won't go into the bigger picture, you know, all that stuff. So wave 1 here. So yesterday, or the day before, we're looking at this as the A wave, the B wave, 1 and 2 in here, and then 1, 2, 3, 4, 5 for third, fourth, and fifth here. So it's probable that we've got a low in place here, but I just want to be a little bit sure about these things. So we'll label this one here because of what the dollar's doing. We just need to shake out the wave count in the dollar to be sure. So that means that I just want to be a little bit more patient here before we suggest a trade. And that means that we would need to see wave 1 here and wave 2 coming back over here, and then we can move in. So what I'm really doing here is that I could probably do that a little bit differently, but I'm going to kind of forget about that spike and look at this as 1, 2, 3, 4, 5 here. That would sort of line up with silver and a few other markets that we're looking at. So I'm not sure about this wave 4, not too fussed about it, but we need wave 5 to come into play, and then we'll need an ABC pattern here. And then we want the first impulse wave to the upside here as well, just to tick another box. And then we'll try to build in over here for that. But even if we get 5 waves here, there's no need to go too crazy on buying, because just in case, because of that situation that's happening in the larger market, in the bond market and so on, we need to be careful that we just don't get some ABC here and then we've got to move wave 2 over here, you know what I mean? So there's a little bit of work, but as I always sort of mention, is that I always take a look at the bigger picture, and when you look at the bigger picture in trading, the idea is to get a couple of small positions. Look at the biggest number here, try to get a couple of small positions under the level here, and then start building above the level. You know, and if you've got a couple of half quarter positions here, then you can risk more over here, and over here more boxes have been ticked, and you've also got a little bit of pocket money in your pocket there to get you to A to B quicker rather than walking. So that's that. And we look at silver. Silver's got the same sort of pattern to the upside, so we're looking at 1 and 2. I think, yeah, that's right, we're looking for wave 4 and wave 5 down here, so that's all good. So 1 and 2, 1, 2, 1, 2, 3, 4, 5 for third, fourth. So we've got the third wave to go, the fourth wave to go, the fifth wave, and then we'll look for this, some sort of ABC pattern over here for this, and then we can look to go back in there. So around the $23 mark, there'll be group 1 above, so 10, 20, and 30, and then group 2 below here. So that will be the swing range for a lot of this, but we should be able to pick this up next session, and we'll want to see where the dollar and the yields and the bonds end up as well. And they've got a little bit more to go as well to, in their moves, as does gold as well, and silver have got a little bit more to go in there. So I won't know straight away, so we'll need this to complete and then this to complete. But even if we get this up here, then if we get 5 waves up here, then we're going to have a correction. We're going to get another 5 up. It's just that silver, if you look on the daily chart, is in quite a messy pattern. So we could really put it down as a triangle pattern working in lots of 3. So we've got to be careful we don't get an A and a B and a C here. We're in some sort of larger triangle, so we'll need to be a little bit diligent about that. So we come over here to the base metals, and I was going to be positive with a move above this top here, right, on this particular XME here, ETF, but I can't do that because I don't have 5 waves up here. I've got 3 waves up here. So I'm going to go for, I feel like this be a little bit of a sucker rally, and we'll count 5 waves up or 3 waves up into this move here. And if this trend line became the support, then, and the support would look like this here. If that was a trend line, it would be like this here. So we'll need that first high above the level, and you get something like this here. So then we could look to go at that point, if that was the case. But I don't think that will. Anyway, we'll see what how that plays out. But because that's corrective, I think I need to look at this as a triangle pattern here of an A and a B and a C and a D here, and then an E here. So an A and a B and a C. Now this could apply to copper it can apply to BHP, and we'll have a look at those today. So I think that any rally that we're seeing in BHP, for example, any copper sort of thing, iron ore is a little bit different. But look, I could quite easily be wrong, but I'm just not getting 5 waves off the low here. So that's like, that's telling me that the current move up is corrective, so we should look for an ABC. If we get support on this trend line and I can see something else a little bip higher up here, then we'll do it. But I need to look for safety first, right? Not greed first. So we're just going to chill on this, but we're going to treat copper and BHPs of the world like this. Okay, so we can get a triangle pattern out of BHP. So if you just stay with me for a second, we'll have a look at local BHP, but this is New York BHP. So just pretend this is an A wave, a B wave, a C wave, and then an ABC for the D wave, and then the E wave here. Right, so that will be that's what we're talking about basically. So that's the XME there, and then we come into base metal. So this is China on the iron ore out of China. As I mentioned before, Singapore has made a low down here, made a beautiful A, B, and C down here. Just didn't do it on the Dalian exchange, but we've been working the count. Because of a few things that have happened over here, we've been working it as 1 and 2 over here, and then moving higher here. So we've got this counted here as 1 and 2 and 1 and 2. And this here will be a little 1, 2 in here and 3, 4, 5 here. So this will be 1 and 2 and 3, 4, 5. So I haven't pulled apart this trend here, but there will be something like this here, okay? And then a bit of time spent here as wave 4, and then wave 5 up there for this wave 2 to wave 3 up there. Oh, we've got one. Okay, so wave 3 up there in that case. So this has highlighted obviously the iron ore stocks, and Rio has been one of them. So we've looked at it in a bit of a bullish light here, so you can just stay long there for the time being. And also, what's the other one? Fortescue Metals, the same as well here. So yeah, same. So they're all good. You can stay. Iron ore stocks, you can just stay long in those. I did want to have a look at BHP because we did have a long trade in BHP here, but I do want to point out that this could also be a triangle pattern of an A, B, C, D here, and then down for the E over here, and this here being an A and a B, ABC for the B wave, and down for the C wave here. It's probably not the case because of it carries a lot of iron ore as well, but it's one of the largest copper, not the largest copper, but very large in that space. I don't know the ratios off by heart. Yeah, so we did look at this on the 20-tick chart here, being long over here with a stop here. We could probably bring this up a little bit now as well, just half the risk basically, but I'll just wait for this to get down from its high, and then we'll so to speak, and we'll check that out a bit later, but that's where that is. So yeah, iron ore stocks does good, and then we move over to copper here. So like the XME here, as I've mentioned before, XME, this little ABC pattern here, and then coming down here, I'm going to be careful we don't get sucked into this where there's a problem there. So I'm thinking we were going to go long above this top here as well, but I just want to chill on this a little bit. I just want to see if this gets up here and fails and moves down at that point, and then we've got to pick it up from this point. So I'm just not ready for that particular market. Uranium here, as you know, that we're bullish, and I was looking at the worst case scenario of a move coming down here just to prepare you emotionally for that. But at the same time, there was a possibility that there was a count in here that could take you higher. So that's obviously the go at this point by the looks of it, but I won't move these too far out of range in case we need them here. But yeah, it's all really about the about the 30 here now. So we'll push up here, and it'll probably react from here and then push up here and then have some sort of ABC pattern and then push up again. That's kind of how I see it, So it's not, it's not complicated at this point. Yeah, so it's all pretty straightforward. Of course, this wave 4, could still come back over here, but yeah, I mean, this, as I mentioned before with this market, we've got 5 waves over here for this, so they need to play out one way or another over here. So we've got this, I can see it way up here, I don't, and who knows? I mean, Germany might just sort of open theirs. You'd think they would open them up again, Anyway, that's all, all these environmental issues that are very real to me as well, and politics. It's it's not something that happy to talk about it, but when people disagree, they've got no way of talking back straight away. So so I don't mention stuff too much. But anyway, this is bullish. So I don't know, that's all I got to say about it really. So all looking pretty good at that point. And okay, over to the energy sector. Now this short trade we've got here with this thing in here, unfortunately I'm going to have to take it out. So I'm going to do that. So it's pretty much a break even, right? Because I can see that this is a little bit impulsive here. So we're probably going to see something like this and then come down. So I'll look for the short trade again over here. I'm just a little bit concerned how this can be configured a little bit differently as well. I still see it coming down. It's just that it could end up being a little bit higher than I want it to be. It could be up into this space here for this at least. It's something I don't want to get caught in this rally. I can see that's a little bit impulsive. I know if you don't want to get out, then the 85 would be about it. So if I go right into say 20 ticks in here and just put in 10k here and just try to look at this situation here, is that if it finds support on 85, then it's going to go higher. Now you can see that the 85 is important because it's already reacted here. Now this corrective pattern could get a bit more here, but otherwise we'll push up here and then it'll do this here. Now if you wanted to put a stop up there and then bring the stop down to here, that's the next logical step. I don't have time for that. So because otherwise it could push up from that point. This here is reminding me of something that's a little bit impulsive. So I just want to get out at break even and reassess it a little bit later. So I would imagine in some way or another, we're still bearish, but I would imagine in some way or another, this length here, this correction here, and then this length again here over to here, something like this here. So it'll be up here, that's the way I see it. So we'll just have to leave it at that for the time being. Then we come over to crude oil, and with crude here, it's possible to put this wave C in here. It's possible to do that because I could go here from wave B up here. I'm looking for 5 waves. I could go wave 1 and 2 and then 3, 4, 5, but you can see that wave 3 is really short here, so that's against that's breaking cardinal rules here, so we don't want to do that. But I'm just saying, and this is why I don't particularly, I personally don't trade this market. So yeah, we'll just see. If I'm going to treat it as wave A and B here, and then just continue on my way as wave 1 and 2 and 1 and 2 and 3. I'm going to put wave 4 here. It hasn't overlapped wave 1. But if the 80 becomes, the $80 becomes the support here, then I've made a mistake at that point. But otherwise, we'll be looking for 3, 4, and 5 to move on down here for this wave C. I don't have a long trade here, and I don't have a short trade at this point, So we were short and we had a stop here, I think it was. So we're out of this for the moment. So that's crude. Okay, so we come over to natural gas, and this is the United States Natural Gas Fund. And if you've been following me on this, then you'll understand that this move down here we've got a very clear ABC here, so that makes the whole pattern corrective. And then we've got this here in 3 waves, so that's corrective. Then we've got this in 3 waves, that's corrective. So an A and a B and a C. I thought that this could be the D wave and the E wave here, and then we come down and we'll make a new low below this thing here. But there is another way to view this ending over here, and that is quite simply looking at it like this. So another move to the upside here as wave C and then down. So that means that I need to move this D away from here and this E away from here, and look at this here from this C wave here as an A, B, C down here for wave D. So we've been counting this down here. I haven't done a very good job at counting it, but so an A, B, C for the wave D here, and then an A, B, and C here for the wave E here. Now this could also get out of control a little bit, because we could look for a 50-60% retracement level area here as well. So in this, if this is going to move up here, and there is a bit of a case for it, we'll have a look at that on the natural gas market itself. And natural gas will be on the futures market, will be bouncing off $3, as I mentioned before, and or maybe it's sunken into it a bit. Yeah, so I've got I can't just use I'm not using the trading view charts at the moment, and that's why I haven't done the yields. And the reason behind that is that because I've got a website and I'm using it commercially, I have to pay extra money, which is $200 and $240 a month. So it works out about $5,000 Australian a year, just under that with GST and all the rest of it. But I already have, because I pay about the same amount for data off another company. I already pay license fees to the NASDAQ for all US stock data. So I'm just waiting for an email back from those guys to see if it's okay if I can use, one license to cover all of that sort of stuff. Anyway, long story, bore you to death, but so yeah, so some sort of move up here. Now I could be wrong with this, but yeah, I think it's a pretty reasonable sort of call. But this here, as a little ABC here, also looks a little bit small as well. So we may end up getting some sort of other kind of complex situation in here for this as well here. It could be something like this as well. Something a reasonable sort of size here. So that's that. And so when we come over here, last time we spoke, we had this as an ABC pattern over here. So this is the 50-60% retracement level here. And so I might need to look at this here as another move up here for this. So we're not out of the woods just yet for this. Now, one of our clients, members, Jason, because I asked folks to send me in any particular accounts that they may have on natural gas to help out with this, and it's always nice to be helped out and have other folks input, because we all can't be right all the time. Unfortunately, it's just not the way life works, even in our general life. So Jason's got I hope he doesn't mind me using it, but I'm sure he's fine. So he's got this down here as a wave 5 of C, so a low in here. So I agree with him that it can be wave C down here, or it could be a wave 3 down here as well, of course, and then have the wave 4 up here. So in this case, he's got here as 1 and 2 and 3, 4 and 5 up here for 1, and looking for an ABC here at this point. Now, just to so thank you, Jason, for this. So so in this instance here, we've got this quite large here. He's got this blown up here into this chart here. So this would let me just see if I can. Yeah, so he would still have this, so that rally that we've got here. So I wonder what he's using here. That's that's 3 is way out of whack here. So this is not the futures, this is a spot market. So the futures is down here. I'm sure it's at 3. So Jason's got this rally, so this is a couple of days old, so have this rally, that move up here as a wave 4 at this point. And the other interesting thing that Jason had was this seasonality chart here. I hope this is okay to show as well. Different folks have different rules for showing things. So this is December, so it's just showing this seasonality chart. Obviously, winter and summer, so on, have changes in them, so that's interesting. So yeah, so Jason's got this as a wave 4 over here that can be valid. I could also count this up as 1, 2, 3, 4, 5 here. So I mean, it could be counted differently. So even as an putting this here as the A wave, as I just mentioned. So I think the way to look at this is that from the low to the high here, this is the little pocket here, 62%, 65%, but it's this number here that it's really all about. So if this number here became the resistance, so you can expect to bounce off here anyway, if it came down here and ended up becoming the resistance in a move like that, very simplistic like this here, or more complex like this here, then if that number became the resistance, this number here, then it'll be pulled down to here. But as I said, the futures market, I think, is already, the futures market at this low here would have been very close to the $3 mark and jumping back up at that point. So that's it for the commodities. So yeah, so there's possibly some major turning points, and gold seems to be one of the markets that could be triggering, not triggering, but leading the way, really, and that is meaning that with silver, if we get that 5 waves up here, then that's a very strong case for having a top in for the yields and a bottom in for the bonds and a top in for the dollar and all those sorts of things. It's a little bit early just to confirm any of this just yet, but obviously there's something going on. We just need to assess it, and obviously there's some US political debt ceiling things, and there's a lot going on that front. So let's see what comes out of the woodwork. Alrighty, thanks for tuning in. Cheers.